Hey, this is Sasha. Welcome to another episode of Let's Talk Stocks, episode number 166, Calling the Market Top. Now, before we get started, keep in mind the disclaimer. There is no recommendations to buy or sell any of these stocks or securities that we talk about. It's just there for educational purposes, so you can get some insights and ideas for your own personal trading. However, keep in mind there's a lot of risks when it comes to trading stocks. You could lose a great deal of money, so always consult with your own personal financial advisor before making any trades. Now, in either case, I want to take a look at the market overall, see what's going on, what's happening, and give you some insights, perspective to looking at a market top. Now, before we get started and kind of get into it, let's take a look at the market. And as we look at the S&P 500 here, you can see the stretch and the run that we've had. If you really look at this kind of on a weekly basis, you can see that this thing just continues to stretch and grind higher. And if you start pushing it on a monthly, wow. You start looking at it, it comes back just a little bit there. And could you be making an ABCD pattern? Wow, absolutely incredible run when you look at it to the upside. However, with that in mind, that also gets me more nervous. Now, keep in mind that the market is fueled by greed. It really just tells you how greedy people are in the marketplace. And that's just the nature of it. You're looking to invest. You're looking to make more money. That's the way the market moves, is it's based on greed. And greed continues to fuel one another. It continues to create this snowball cycle and effect. And that's what creates further and further run-ups and stretched run-ups. Now, when fear or panic kicks in, a lot of things get taken out very quickly, and it comes fast, much faster than the greed. The greed is a slow growing process. It just continues to grow slowly, whereas with fear, it's much quicker, and that's why the downside is usually more violent. Now, the thing that scares me a little bit more about the market, or it has me more concerned, is always that when you don't get that many pullbacks and the market continues to trend higher, those kinds of things is really where you have less opportunity. In fact, there's, as you start looking at here at the 200-day moving average, or the 200, you can see we're so far stretched on that 200. How far above it is, it's pretty wild. So in either case, with that being said, and with that in mind, you have to trade the market of what's going on, what's happening, and just the way it's moving, acting, behaving. Looking here at the SPY, the spiders, you can see we did have one day here with a little bit more volume on the sell side, but they brought it right back up. So it does trigger a little, hey, maybe a couple of day pullback could happen. But other than that, it's not anything major at this point. I mean, you've created so much greed in this market that you need kind of a real big panic to start creating a lot of fear and whipsaw action. I mean, right here at the 2,700 on the S&P is really what you're watching, because you'll probably get a bounce there. And if you don't, that's where some panic could start to creep in. Then you start looking at some of these lower levels. As you get into this, you start getting into the 2,600 because there's not a lot of supporting points. There weren't a lot of action happening at certain levels. So you start looking at ranges of a good 100-point ranges or 50-point ranges. Of course, in between there, you'll see a few little subtle things, but really we've blown past a lot of levels. So anyways, with that in mind, you want to be very cautious in these market environments. Can it continue to move higher? Absolutely. You can't really call the top on these markets, because what happens is they keep inflating. The way that the market really works and operates is that they continue to pump and inflate it based on the greed. The federal interest rate continues to stay fairly low. They don't want to raise it, but the US debt keeps climbing. Think of it like this. It's like you having a credit card where you have no credit limit. And even though it starts getting high, or it seems high, let's say $100,000 on your credit card, then $500,000 on your credit card, what they end up doing is, because they can print more money, because they can manipulate and modify certain things, like lower the interest rates of things, what ends up happening is, instead of the $100,000 limit on your credit line, well, we'll just go ahead and make it $500,000. Well, once you get to $500,000, well, why don't we just go ahead and sell a couple of the things you bought, and we'll also increase it to $700,000-$800,000. Now, keep in mind, this actually creates further problems much bigger problems eventually, but how far can you really stretch it? Well, that's the big question now, isn't it? So when you really look at, I don't know if I can look at it on this screen, but let's take a look at the DXY, the US dollar index here, as we've been taking a look at the overall, let's see, marketplace. And we take a look at the year to date. Okay, so when you start looking at the US dollar, the DXY, you can see that we've actually been going lower for quite a bit of time. Let me take a look. There's another chart that pulls up the DXY quotes, and you can really see a better picture of it. So here's one from bar chart. So if we look here at the yearly, okay, so April 2017 to now January 2018, basically, let's go to the 5-year. You can see that right around 2017, okay, right there over the last year, almost right at that election time frame for that last year since Trump's been in office, you can see the US dollar has actually been kind of decreasing and declining. Now, right now, it's still okay, because when the dollar becomes more expensive, it becomes a little more difficult to trade things because a lot of trade happens in US dollars. However, if it gets too low, what's really happened is as the market continues to move higher, your actual value relative to the world continue to decrease. So market higher, your value lower relative to the world. So really, you're just breaking even. It's kind of like putting your money in the bank. Because of inflation, you're still breaking even, right? So the same thing here. Because the dollar has been going down quite a lot, which nobody really talks about. Really, with the market going higher, you're making more money and your account seems bigger, but the cereal boxes get smaller and just things continue to contract. So overall, when you look at this chart and picture just over the last 6 months, you can see the trend here is that the dollar, people don't have the confidence in the US dollar, and your net value just continues to go down. So really just with the market going up, the dollar is going down, so it balances itself out. Anyway, point being here is that when you really have a strong market, you also want the dollar to also be fairly strong or at least stable. And right now, I'm not really seeing that. So here, it's giving a little bit of a caution signals, I guess you could say, especially with the VIX being so low, with the market being so high. As we look at the extensions here of Bollinger Bands as well, how far stretched we are. That's, of course, the shorter term. But if you get into the weekly or even the monthly, as I start looking at some of these things, you can see we're near at the upper range. So a pullback to the 2000s, and probably take a month or two to do that, to the 2000 in the S&P, that's 700 points lower from here, and the market would still be fine and healthy. But imagine a 700-point pullback, right? So it's difficult to call the top because you can continue stretching this to the 3,000, to the 4,000, and markets in general, as you look at the Dow Jones Industrial Average or even the S&P, I mean, naturally they're set up to go up because, again, what do? Just like the credit card thing we talked about, they're just made to continue to pump, inflate, and with inflation to rise in the future. So in general, markets go up, but you do have some of these damaging points and cycles where the consumer gets hurt really badly. And especially if you don't have a lot of money on the sidelines to make purchases at this point or these points, when things do pull back and get nasty, well, you can get hurt pretty badly. So anyways, just be cautious that the higher you go, the more likely or stronger the pullback can be. Now, if we take a look at some individual charts here that I have, we just look at the overall price of recent movements. For those of you that are a little more active, you can take a look here at Square, holding here at $35. So this one's still doing well, doing the stair step pattern. If you look at Amazon, also breaking that 1200 level and continues to move higher. On the weekly, same kind of thing, above that 1,000 and now continues. But again, to me, it's pretty stretched. If you look at the monthly chart overall and you start drawing some trend lines at the angle that these things are going, and then you redraw the new angle, ooh, you know, they start looking a little bit stretched, euphoric. Anyway, ExxonMobil and oil breaking above that $85 range right there. That's of course on the monthly. If you go to the weekly, you can see right there, volume picking up. Also on the daily right there, doing fairly well. Western Digital, looking at it right here, it's trying to hold the 80. If it breaks the 80, might be a nice short position or opportunity. Coke here also attempting to hold that $200 level. If it breaks here, you could see some further lower prices. We also have T-Mobile. Somebody asked about this one. Here's our resistance level, kind of at the 40. Stock is struggling. You have a 35 range, which is somewhat a value area, but otherwise that 40 is a little bit of a resistance. FedEx continues to power higher. If you look at the daily, boom, 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 just stair-stepping up, 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 and away. Almost like some of these stocks can never go down, right? You never heard me say that before. So, yeah, be very careful when you start seeing these things get so far stretched. Could they keep going further for a little while? Yeah, but be careful. Amazon or Apple moving sideways here. Here's our resistance. Here's our support moving in this range. So it's kind of slowing down. It's not so much as a growth company as it used to be. So we're getting more consolidation patterns recently over the last year or two. So we did have some growth here in early 2017, but otherwise you do have some sideways action and still moving quite well. Not as powerful as it used to, but recently I'm noticing a little bit more sideways than it used to be. A lot less press on it as well. You have PayPal, also another big one, breaking some of these levels, getting right into the 80. It could be a little bit of a resistance level right there, so be careful. But again, you know, moving average way above it in that upper range, of course, so be careful there. GoPro's been a hot discussion topic. Toast on this one. It's been toast for a long time. I've talked about it being toast for a long time. DKS, it's trying to get back above that $33 level. If you take a look at the monthly right here, you can see here's kind of our support resistance. So if it gets back above this, you could say, okay, that's 33 is your key line in the sand, and maybe you might get some hope into the 60s or the 50 level over there. We also have Netflix powering higher. Again, massive movements. But look at that volume contraction on this. Very worrisome, very worrisome. So here, as we look at these on the weekly as well, ooh, you know, just that volume not looking that great. So has me concerned. You want volume when you have healthy movements, but here little bit of concerning. Things are slowing down, but of course market still keeps pushing higher with algorithmic trading. There's one right here. Somebody asked me to take a look at. The weekly looks amazing, right? You went from a $3 stock to a $9 stock. You basically tripled your money. But then as you get into the daily, remember, these stocks that break out at these low levels often pull back. A lot of it is on hype. So, you know, pull back here to the $7, even $5 is quite possible with time. And then you might get another bounce, but overall cheap stocks are cheap for a reason. So always be mindful and careful chasing things that break out from a very low level and double and triple within basically, you know, 2-3 weeks. Let's take a look at JP Morgan. You got these banks also stretching kind of over here at these triangle levels, pushing higher. Also a bit of a concern. And here, Bank of America as well, past the $30 range. If you look at the monthly chart, you know, your 35 is kind of that stopping point, or hey, it's getting up there. JP Morgan, you know, when you look at that monthly, I mean, this stock is performing like a tech growth company with these tax cuts, all these things coming in. Are they really going to be able to do them in terms of how well is it going to pan out for the economy? Yeah, it's great for these big corporations. I don't know for the mom and pop, how good is it going to be? But as far as corporations, yeah, it sounds good right now and they get a tax cut. But overall, will the economy really be stimulated? We'll see. Time will tell. And let's take a look at Cisco here. Continues to do well, hitting right around that $40 range. also fairly stretched, fairly frothy levels in that terms. But when you look at the bigger picture back where it was, it looks okay. But here on the shorter term, a little bit stretched. I would always be taking my money and profits when things run up like this. You don't get these kinds of runs in the marketplace that often. And for me, when you're hedging, you're typically losing out a lot on your hedges when the market's doing so well. So if you have been doing quite well in the marketplace and you're long only trading, man, congratulations, market's doing fantastic. If you're hedging a little bit, you're having some losses at the beginning of the year here already, don't worry, still a long road to go in 2018. So I want to wish you a happy new year. I hope you had a great 2017. So I want to thank you so much for joining me this week. There's a lot of great things that I have planned for this year as far as new courses coming out, and just a lot of new content, new material, and new ways of doing things. So thanks again for sticking with me. I hope you enjoy the week ahead. Keep your eyes open for some new videos, new content, new material, announcements. And if you want to get on my newsletter or check out the Getting Started page, if you're brand new to trading, take a look at it. It's absolutely free. Click the link there or just subscribe to the channel. Anyways, thanks again, and I'll see you next time.